I'm Ashton Addison from EventChain for Investmentpitch Media and FinTech News Network. And today on Blockchain Interviews, we have Max Keiser, the host of the Keiser Report and the founder of Heisenberg Capital. Max, thank you so much for taking the time. Welcome to the show, and it's a pleasure to have you here.
Hi, Ashton. Thanks for having me on.
You're very welcome. I'd love to kick off our discussion with a little bit of the current situation in the markets, and then we'll dive into the intricacies of Bitcoin and where it's heading. And I wanted to start off by talking about the market in the last decade has had such huge gains, and the technology times are a little bit different now, but the stock market was also doing very hot just before the stock market crash in the 30s, and we know that the markets go in cycles. What are your thoughts on the current market crisis? Do you see history repeating itself, and will the cycle continue to potentially something far worse than we've ever seen before?
Right. Well, markets are definitely extended, and historically they're trading at multiples that we see typically at tops. But we have an interesting situation that the central banks are really bottomless money printers. There doesn't seem to be any limit. And the Federal Reserve owns hundreds and hundreds of securities, and these central banks buy up all these securities, and companies are buying back their own stock. And the cost of doing all this is zero because interest rates are zero. And so I think we have further to go, really. I mean, these central banks can add another 10, $20 trillion of assets to their balance sheets. And so the momentum is certainly there, and we could see this go higher. Obviously, there's a high concentration in just a few names in the US. Those names are well known, Apple, Amazon, to name two. And, there's no reason why we're not going to see them continue at the current trend and for the short term.
Mm-hmm. Definitely, it's been going up for almost 2 quarters, half the year now. It seems like it's been a V-shaped recovery with no sight of ever going down. And as Dave Portnoy is saying, stocks only go up right now. But this has a lot of retail investors and dumb money excited about the market, putting their money in. I've been hearing from delivery drivers, Uber drivers about their Robinhood gains, and it's getting a lot of people that don't normally invest into the market invested into the market. And yes, it's going up, but it seems like at some point it can't continue to go up forever. Do you see like all of these retail investors coming into the market just expecting easy gains and eventually getting liquidated and losing everything like little sheep? Or what do you think about that?
Well, you have two groups. You have the Robinhood traders, which we can talk about in a moment, but you also have Warren Buffett. So what's Warren Buffett doing? Warren Buffett has got a huge cash position. Warren Buffett has recently moved into a gold stock, which is very different kind of investment than he's used to making over the past decades. And as of this week, he's now got a big position in Japanese stocks, Japanese conglomerates. So he's getting out of the dollar. I think that's pretty clear. And that should be a red flag to folks out there that one of the world's most successful investors is getting out of the dollar. As far as the dollar goes, if you look at the best performing markets in the world, they're actually like Zimbabwe, Venezuela, Iran. It's because those currencies are collapsing. So you have to ask yourself, are they reflecting loss of confidence in the dollar? And I think the answer is yes, to a large degree. Ray Dalio, big hedge fund guy, one of the biggest in the world, he's got 20% in gold now. That should also be a warning to those who don't think we're going to see inflation. The biggest loser would be in the bond market. So I think you've got to look at the bond market should be the kind of indicator that we're at the end of this cycle, right? Because the bond market is going to have to come to grips with at some point with this collapse of the dollar and this rise of inflation, right? Inflation is the enemy of the bond market. So I don't know how much longer they can keep that bond market going. Once you start seeing the bond market invert and start to slip away, then you got to take a defensive position. And you've already seen the smart money moving into gold and Bitcoin. So then getting back to the Robinhood traders, I don't think they're going to be nimble enough to escape the blade of the guillotine once it falls. And that's typical. Every generation usually gets crushed by at least, by a collapse. I've been through 3 of them. Wow. The 87 crash, I was working on Wall Street. The dot-com crash, I had a dot-com company. And the 2008 crash, I was mostly just a journalist at that point reporting on it. So this would be my fourth eyewitness to a major crash. Robinhood traders, fascinating thing to me, and unusual, I would say, in my close to 40 years in the markets. I've never seen a phenomenon like Tesla. Really, it's up again today post split. It's well over a $400 billion valuation. I think it's getting close to $450 billion valuation. And this is, I think I've never seen anything like that in my 40 years.
Yeah, it's pretty crazy with the Tesla stock. Even after the split, it was up like 10%. And I think it's like 10 times more cost per that stock for per $1 of profit than any other similar companies. So it seems way overboard. And it's very interesting that you mentioned Warren Buffett. I saw that he invested in Barrick Gold, and he's moving out of most of the American bank stocks. But he still hasn't invested in gold itself. I know you're a big gold fanatic. Do you see him taking that move soon?
Well, Barrick Gold is a leveraged play on gold, and it does pay a dividend. And if you like gold, why not get a leverage position in gold? So I think it would make more sense to him from that point of view. I guess, again, both Ray Dalio and also this Ohio pensions fund that just reported the last week or so, they went from a 0 allocation of gold to 5% gold. So now if the institutional money starts getting off 0 and moving to 5% position in gold, that's huge demand. That's a $50 trillion market that goes, suddenly they want an allocation of 5% gold. Gold's at just under $9 trillion market cap, but if you add up the global money management universe, it's about 100 trillion. And right now, in aggregate, it's less than 1% in gold. So let's say everyone decides, you know what, I'm going to follow Warren Buffett, I'm going to follow Ray Dalio, I'm going to follow this pension account, I'm going to go 5% gold to be prudent because I need an inflation hedge. Okay, so that's now a $5 trillion demand on a $9 trillion market. That's already, the supplies are tight, and the COMEX and the LBMA are already, there's a run on those two institutions where they can't source the gold. So you could see a massive short squeeze, massive demand, all coming together, gold gapping up to 3, 4, 5,000 over a week. I don't think that would be really shouldn't be a big shock to folks at this point.
Yeah, when it does move, I could anticipate it moving quickly, right? And you've been a proponent for gold and silver and Bitcoin for 10, 15 years, or at least with Bitcoin since close to after it came out. And you've been seeing what's happening in the markets, and I think that you have a great position, and you're always recommending for people to look into gold and silver. And there's a lot of people that are, they trust in the stock market, and that's the only thing that they invest in. They still haven't picked up any hedged assets. I guess my question to you is it too late to buy in? And more importantly, when does it become too late to buy into these assets?
Well, and you have to keep in mind also that when there's trouble on these exchanges, like for example today, several of the exchanges, including Merrill Lynch, were not operating. They were technically in default. They were not processing trades. And I think so people have to realize that when they start to run for the exits, it may not be easy to get out. When I was working on Wall Street during the 1987 crash, we would put an order in on that Monday, Black Monday, and I didn't get an execution until that Thursday.
Wow.
That's how backed up they were.
Yeah.
And you had no idea what you bought or sold, or in this case, sell. You had no idea what the print was for 4 days.
Wow.
So how do you manage those margin accounts? How do you manage those accounts? How do you know? You're completely blind. So here you have a bunch of traders who they're margined, no doubt, and they're in options market, no doubt. And then suddenly you have no access to these platforms for several days. And that's where the danger is. With gold and silver, you can store it outside of the system, and there is no counterparty risk.
Yeah.
If you have gold and you store it in a vault, and there are several vaulting services that are good, you don't have that issue. And that's going to be a big issue going forward, is just the mechanics of these platforms, because they're very new. I mean, Robinhood goes down every couple of weeks. Imagine if you have a crash like scenario and suddenly they're I don't know how many millions of users they have, something like 40 million users. I forget the exact number, but they're all going to come in together and try to get out at the same day. Their technology doesn't scale. I mean, not to that extent, not simultaneously. It's going to take them a long time to put in the servers just to handle that traffic, right? So now that's a huge risk. And when you sign up to these services, you sign off and you are essentially signing away your right to sue them for inaccessibility to your funds in case of force majeure, or in case of a problem,
Yeah.
right? So you have no recourse, and so you're just going to be, it's a big problem with gold and silver. You have the ability, and Bitcoin, to essentially custodian those assets outside of all these systems, and that's a huge advantage. And I think people need who are stock players, who are averse to these as their assets like gold, silver, and Bitcoin. Just think about what I'm saying here for a second in terms of managing your risk. You need to be able to function in case of duress. And if everything is locked down, you're going to have no access to anything for a number of days or longer, and that could be a big problem.
Definitely, and that's a huge advantage to Bitcoin and precious metals when you're holding them, to not have that risk of anybody else. You're trusting somebody else to hold your assets for you, and they could just disappear. So I want to touch on diving into the Bitcoin protocol a little bit. I know you've been a huge fan of the Bitcoin protocol, and one of your philosophies that I was reading into is that Bitcoin is actually observing us and working us. Can you talk about? Can you elaborate on that philosophy that you have?
Sure. The Bitcoin technology is it's profound and it's philosophical in some ways, because it's the first asset that we've seen that enjoys absolute scarcity. So in terms of, it's different than gold, because gold is relatively scarce, but we know the supply, the stock to flow ratio, et cetera, the supply is increasing by roughly 2% a year, and people drill for gold, and there might be asteroids with gold, and potentially you can find gold in seawater and stuff like that. But it doesn't have this attribute of being absolutely scarce. So Bitcoin has this attribute. It's very unique in that sense, and that people use it as a gold substitute, and that it's completely outside of the state, and that it issues its monetary policies to issue new coins every 10 minutes. And as a result, people who start to invest in Bitcoin, or start to put their savings into Bitcoin, it tends to kind of change the way they think. We've seen this already in gold, because people who gold buyers tend to think more in terms of savings than spending, right? I mean, and Keynesian economics is all about spending and going into debt. And in American financial press is always propagandizing savings as being bad. And they talk about the paradox of thrift and the savings glut. And they use all these words to vilify savings. Don't be a saver, be a spender, get into debt. And then gold buyers are like, wait a minute, I'd rather have individual wealth that you can't confiscate, and I don't, that's my you money. I don't want to, use foul language on your show, but it is what it is. So Bitcoin is everything that fulfills what you find in gold in terms of what it does to your consciousness. It changes your way you think about money, think about savings, think about the economy. You start reading about Austrian school economics. You really start to change the way you think. So Bitcoin is everything that you find with gold, but just that much more extreme, if you will, because it's more extreme than gold in many ways. It's more portable, it's more divisible. It has everything that gold has, but more so. And so you ask yourself, why is Bitcoin? Why is it here? Why did it come in 2009? What is it doing? What's the point? And you get into a very philosophical mind about, maybe that whole fiat experiment that was started in 1971 when U.S. closed the gold window and the world went on a pure fiat standard for the first time in history, maybe there was we have forces that were not really visible to us, are working to try to redirect us and nudge us, back away from this path of fiat madness.
So that's really interesting what you have, your thought process around Bitcoin working us and how it acts as a substitute for gold. But I want to talk about governments. I heard that you see governments holding, different gold reserves, and whoever's going to hold the most would be essentially having strength over other countries. But also there's that Bitcoin play where there's this theory that governments will subsidize Bitcoin mining for a hash war, and different countries will all be fighting for, their part of controlling the hash power in Bitcoin. Can you talk about how you see that playing out, what countries you see on top, and what countries, the countries that are on top, what advantages that they would have?
Right. So getting back to gold, and gold suddenly is in fashion. Warren Buffett's in gold. Pension funds are in gold. Ray Dalio's in gold. And central banks around the world have been buying gold. Russia and China have been stockpiling gold enormously, hundreds of tons. And so if the inflation genie comes out of the bottle and suddenly fiat money is being dumped in gargantuan amounts, and there's a mad rush for gold, we may have a problem sourcing gold because there's just not that much gold. There's about 160,000 tons above ground. I think 35,000 tons is already in central banks. 20,000 tons are held by women in India. So of the 100,000 tons remaining, you've got 30,000 tons or more in jewelry. And you work through the numbers, and it's just, there's not that much around. It's hard. If you needed to buy 300 tons of gold, you're not really going to find it, not at the current price, right? I mean, it could be like, okay, I'll sell you 300 tons of gold, but I'm going to sell it to you $25,000 an ounce, right?
Yeah.
You can have all you want at 25,000.
Yeah.
So then there's going to be like, well, what we need hard money. So I think that's where you're going to see these central banks turn to Bitcoin and sovereign wealth funds. And they'll be like, well, this Bitcoin thing's been around now for 11, 12 years. It's 99.9% fail proof. And it's got everything we want in hard money. And so then you'll see countries start to accumulate gold, and they'll start to mine Bitcoin, and they'll start to mine for Bitcoin as well. And then they'll start to subsidize the money they would be subsidizing the energy industry in, and subsidizing that in the Bitcoin mining space. And so then you have the game theory kicks in. So for example, Iran right now has something like 2% of global hash rate of Bitcoin. And what I understand, I haven't seen hard numbers, but that's what I understand to be the case.
Okay.
And so let's say suddenly, it comes out they've got 5% of the hash rate, and they're redirecting their energy business into Bitcoin mining. And so then, America says, wait a minute, this is like the Sputnik moment. Iran could potentially be the richest country in the world if they have a significant piece of Bitcoin, and the price goes to $400,000 to compete with gold per coin. I mean, Iran would be the richest country in the world. No, we better stop this. So then they start to subsidize their mining. And so you have this game theory kick in, and these countries are now competitively mining. So what this does is it increases the hash rate. So the hash rate now is over 100 quintillion calculations per second in the Bitcoin mining space. That would increase, which means the security goes up, which means it's even harder money. Bitcoin is not only it's hard money, but it keeps getting harder every week, every month, because the hash rate keeps getting higher and higher and higher. So then with that higher security and higher hash rate, that means price goes up. So it becomes a self-fulfilling prophecy. So now you're chasing the Bitcoin up through 100,000, 200,000 a coin to get the hard money, because all your fiat money is collapsing. Nothing is surviving. US dollar money is, collapsing. These reserve currencies last about 100 years. If you go back to Portugal and France, Spain and the Netherlands and Great Britain, and then America. They all took their turn having a world reserve currency, and it lasts about 100 years, and then they lose it. And it looks like the U.S. is on the path now of losing world reserve currency status. So there's going to be a lot of fiat money chaos. As always, there's going to be an attempt to reset everything against gold. And remember, central banks never went off the gold standard. Central banks have always settled their accounts with gold. That's how they do business. So this idea that we're off the gold standard is an illusion. We're not. Okay. We're central banks are still very much on a gold standard. So then they sit down like Bretton Woods agreement and they say, we've got to reset. The only way we can get rid of this debt, and the global debt's now greater than global GDP. It's over 100 trillion. Okay. Wow. Yeah. So say we've got to reset this debt against gold, of course. So we got to bring gold up to 10,000 an ounce. In the meantime, by then, it's already going to, there will already be a race in the Bitcoin space. So that's how it kicks in. That's how it plays out. And again, I ask, it's in Bitcoin, part of the protocol is that every 4 years they have what's called the halving, where the emission schedules get cuts in half. And it seems like it happens during election years. It happens during financial chaos years. It seems like it knows what it's doing. Again, it seems like it has a hyper consciousness of what we're up to in the fiat world and is already gaming us, right? Yeah. So they had the halving. Now the hash rate goes up, price goes up, and with the 2008 global financial crisis, we're having part two because they never solved the 2008 crisis. They just flooded the system with more fiat and credit. They didn't solve anything. Now it's much worse. So now, but unlike then, there is Bitcoin now as an escape route. So that's how I see it played. It's that game theory element that's baked into the Bitcoin protocol, just played out on the sovereign level.
Yeah, that's super interesting. And the fact that Bitcoin was born in the 2008 crisis and now it seems to be thriving so far in this 2020 crisis, I think there are a lot of good things ahead for Bitcoin that we could look forward to. And I'm running out of time, Max, but I really appreciate you coming on the show. And I do have one last question. For people that, besides buying Bitcoin and buying gold and silver, do you have any advice for people in the middle class that are looking to get through the tough economy and these tough years ahead?
Well, not really, other than to get started, get off zero. Even with if you're doing dollar cost averaging on Bitcoin, we have a relationship with a company called Swan Bitcoin, which makes it very easy to on-ramp. And you can do $10 at a clip and just do a dollar cost averaging. With gold, it's just a matter of getting started and being disciplined about it. Unfortunately, there's no shortcuts. So, I mean, if you're starting from absolute scratch, it's tough because you look at the road ahead and it seems interminable. But nevertheless, every journey begins with that first step. Ashton, as you know, in Vancouver, right? Vancouver is a hotbed of gold and hockey. How come the Canucks are already out of the Stanley Cup? What happened? I think they got eliminated already.
Well, they haven't been doing too well for the last 10 years, but times are changing in Vancouver. And yeah, you're right. The gold and the precious metals markets here are pretty hot. And as well, we do have the first Bitcoin ATM in the world just down the street from us as well. So I think the people in Vancouver will be doing all right. But yeah, that's great advice, Max. You really have to start.
We started a new podcast called Orange Pill Podcast, and it's only a few weeks old. And in that podcast, we kind of walk through some of the basics, like how to get started in Bitcoin and not lose your Bitcoin, because a lot of people lose Bitcoin. It's easy to lose your Bitcoin, but so we talk about that. We talk about gold, silver, how the companies that we use to accumulate gold and silver. So it's called Orange Pill Podcast, and you can find it. It's on many platforms now. Stacey Herbert is the producer and the genius behind the Orange Pill Podcast. So it's quality shit, Ashton. What can I say? We're known for quality.
Definitely.
Stacey's got she's a quality, producer. Everything that comes out of Stacey is quality. That's the key. It's got to be good quality.
That's awesome. Well, I will leave a link to the Orange Pill podcast in the description. Thanks so much for taking the time to speak today, Max. It's been a pleasure speaking to you. All the best, and let's follow up in the near future.
Okay, Ashton, have a good one. See ya.